coming out for next month, which I believe we have August 11th as the date set for that one. I don't know that that we've seen the end of it. I think that this acceleration that we have with the recovery and the growth and people getting back out there, I think that we either still rise just a little bit going into August report, or that we hold steady into the August report. And if we do have that inflation number come down, I think it's going to come down just a little bit. We'll have to wait and see as that comes out. However, the higher inflation number wasn't totally unexpected. During the pre-market, the futures seemed to take it a little bit hard at first, and then recovered a little bit. And then we'll just have to see. We'll check in with how everything's handling the most recent news. All right. So, with that said, there we go. Let me bring up WEBULL. There we go. Share that out with everybody. So now we're looking at our WEBULL stream, and then one other thing, I want to make sure I can see your comments when we're looking at it here in YouTube as well. All right. So today's live stream, I typically tend to start them around 9:15, and then they go until they're supposed to go until 10 a.m. I often go over, sometimes a lot over, and it ends up making it pretty lengthy. But as always, if you want to check out the comments and say good morning, ask to see a certain stock, ask any other questions that you want to ask. I typically tend to get to them. And good morning, Sean. Good to have you. So anyway, ask any questions that you want to ask. And otherwise, I'll just go through and I'll take a look through the different stocks that I like to watch and that I like to follow, and just find out what's going on. So I'm going to bring up Goldman Sachs because they reported earnings, and they actually had a fairly good report on earnings. You could see that. Actually, let's go to the daily first, and we'll come right back to intraday. There we are. So with Goldman Sachs, with the earnings coming up for Q2, or the first half of 2021, into that second half, you can see it was anticipated that we had the price increase up to yesterday. And then if we go to the intraday today, so that we can actually see the after hours and the pre-market hours, you can see a little bit more of that price action. And they actually had almost a 50% beat on earnings per share. And they were supposed to be around $10 per share, and instead it came out to more like $15 per share. And I believe it was the revenue beat that they had going from it was supposed to be about $12 billion expected to $15 billion actual. So between 20 and 30% there as well. So just incredible earnings. And I said, if you're watching the live stream yesterday, I said that I expected the bank earnings to come out fairly strong. And well, for Goldman Sachs, they did come out strong. So it's nice to see that. But I think that them being such a big and well-respected bank, I think that they're just sort of a forecast for what we can expect coming through for the other banks. So we also have JP Morgan to look at. I don't think Bank of America is today. I feel like they were either tomorrow or Thursday, if I'm recalling correctly. We can take a look and see when it is that the earnings come out. But for Goldman Sachs, if we go to the news here, and let me see. Seeking Alpha is usually pretty good. It is one that I have a premium membership to. Let me put it up there. Woo. If I press the right buttons, we'll have it come up on the screen. I'll put WEBULL back up there until I have it going again. But you can see the some of the news that you have coming out in the past few hours about Goldman Sachs and about that earnings beat. There we go. So Seeking Alpha is going to pop up here, and it should be the stock that we're looking at. It looks like, let me see, hot stocks, earnings driving moves in Pepsi, Nokia. Oh, Nokia's got some pretty awesome news. They have updated guidance for the for the second half of 2021, coming from fairly strong numbers for them for the first half. We'll get back to that. So Goldman Sachs Q2 earnings beat powered by investment banking strength. So helping a lot of companies bring their stocks public is something that really helped them out over time. Also, that dividend increase, 60% increase in quarterly dividend. That's something that could be for people who haven't already had a a position in Goldman Sachs for the dividend investors that are out there, seeing an increase like that. We'll either keep the people that are currently there or the ones who currently don't have that position that are dividend investors. That could certainly make it a lot more attractive. So the money that they pay out is through the success that the company's had. So that's awesome, and that could bring in some more buying pressure that we would have there. Let me see, per share beginning in Q3 2021. Excellent. So good news all across the board. We are missing some guidance that we have moving into the second half of 2021 from Goldman Sachs. And that's really what we're trying to find out, is what sort of guidance they have for us going forward. So right there is the EPS versus consensus. Just under $10 per share was expected, and it came out being actually 15.02. And then let me see. They also mentioned here what it was like in Q1 and the 53 cents per share in the year ago quarter. So I mean, that's during the pandemic here. That's incredible. And if we look at the price action during that time, let me go back to the chart and let's go weekly. There we go. So year ago quarter. So yeah, around $200 per share. They've almost 2x since then. And for a large company like Goldman Sachs, in order to 2x over a year's worth of time, just speaks volumes for the strengths that the banks have experienced in the financial success that they've experienced over that time. All right, let's check out JP Morgan. There we go. All right, so JP Morgan, you can see they had a similar past few days like Goldman Sachs did. Looks like they were resisting right around 167. Now they're back up to 158, finding support right around 150. So just about in the middle of those two. And let's look intraday, see how they're doing. There we go. After the trading company reported Q2 results, earnings per share increased. Wow, nice year-over-year numbers, but then again, it's going against 2020, so which beat the estimate of 3,020 cents. So not as strong of a beat as Goldman Sachs had, but still a beat. So that's always a good thing. Let's see what else it has to say. Revenue. Let's see. Okay, so beat estimates on revenue, and then declined by 7.16 year-over-year. Beat the estimate. Okay. Hasn't issued any earnings guidance for the time being. All right, so pretty much the same thing as what we have for Goldman Sachs, that they're not really giving that sort of information out. You can see we had a big drop, and then now it's sort of recovering as people digest that news coming out of JP Morgan. All right, crypto. Oh. All right, I'm going to restart that, and we'll use crypto coin market cap. There we go. So Ethereum dropped back down under 2,000. Bitcoin dropped under 33,000. With the CPI data that came out and higher inflation expectations, and there's some speculation out there that that's because of how inflation impacts margin. So that sort of margin buying and that leverage that you would get from it. So whether that's the truth or not, I'm not entirely certain of that. However, Ethereum under 2,000 is a fairly attractive price. It's not one of my stronger buy zone. I should say it's one of my stronger buy zones, but not the strongest buy zone. Seeing this under 1,800, I think would be when you really start to get into those steel type prices. So that's something to watch for Ethereum. Bitcoin under 30,000 starts to get really attractive. Under 28,000 becomes super attractive. Almost supermodel of the coin of the cryptocurrency space when you start to see those kind of prices come out of them. So let's look at the price action that we have here. All right, well, that's coming up. I'm going to bring WEBULL back up. All right. And we'll go to the trading view on this one. Oh my goodness, Webull, leave me alone. There we go. It's actually Mac that's bugging me out right now, and the fact that my system resources through live streaming are a little bit full, and I'll switch to a desktop eventually where I can actually swap out the parts that I need and increase the RAM that I need more readily than I can in a laptop device. This does about 90 to 95% of what I need it to do, but then the live streaming stuff is a little bit taxing, a little bit demanding. All right, you can see the support that we established with Bitcoin right around this 32,000 mark. So we're sitting in a really good place. The fact that we held up above that during this most recent data that we got, also a strong sign. And we have just this slow, steady tapering. Besides this little spike that we have in the middle, you can see that steady downtrend and then straight across here. And as I've mentioned a couple times before, there just isn't any major catalyst. I think as we start to get more adoption coming through for Bitcoin, whether it's by institutions or whether it's by governments, watching more adoption in the crypto space and more buying into that Bitcoin, I think that we're going to see this price finally, some of the selling pressure, something that's been holding it down recently, kind of lift up and allow it to increase over time. So we're getting narrower, getting tighter. This bearish pressure, downward pressure, squeezing down on the bullish pressure from underneath, and it's just going to be an area of contention for a while. I think that we could see one big dip coming up in the future that's going to push us into a sort of, we'll call it a relatively scary level compared to the most recent prices that we have. I think it's going to jag down sharply and really cause peak fear. And then I think that we're going to start to see it recover and then go back and finally start breaking out of this this area between like 33 and 40,000 that we've seen recently. All right, we go up to Webull here. We have about a minute until the market opens, and there we go. Solar, just looking through some of the solar plays that are here. Solar's been sort of recovering recently, and it's one that I think was a little bit delayed in recovery, and compared to some of the other stocks that we have out there. And let's actually go to TAN for the solar ETF rather than looking at individual companies. There we go. So similar charts to what you can see in all of them, and it's had a bit of a rough time up through the beginning of June, and around there's when I said, hey, take a look at solar. It hasn't really had the same sort of recovery that we saw with a lot of the the tech plays and the high growth plays, renewable energy plays. I said I think its time's coming, and after that, it's really recovered quite well since those times. So hopefully somebody out there was watching this and really took advantage of that and was able to put themselves in a fairly good position, put them into the green. That would be absolutely wonderful to see. All right, there's our opening bell. Check out some of these numbers as they jump around here. The first minute of this could be interesting, especially in the light of the CPI data. Nokia floating to the top for the stocks that I have on my list here. I mentioned this during the pre-market that they've had some updated guidance. Look at that gap up that we have in the daily chart for Nokia, taking us up almost to $6 per share. And this is one of the highest prices. I mean, take a look back here. This is during one of the short squeeze, high momentum moments that we had for Nokia. And around this time, I was taking a look to see what was going on with them. And when I was reading up about their tech and how they have themselves positioned with their technology, I think that they are putting up some serious competition in the 5G space compared to Ericsson was one of their nearest competitors. And I really think that they're poised to overtake Ericsson by market share and just with superior technology overall. So this is one that I have a position in my growth portfolio, and I'm glad I did. And it took me a while, especially during the sell-off that we had since this time that we had that, watching it go under $4 per share and then recovering nicely since then. Here we'll go intraday. There we go. And you can see the gap up. And again, this is as a result of their increased guidance for the second half of 2021 that they're expecting, I believe, about 5% better sales than what they had originally projected, and they increased that by 5%. So that speaks to a lot of confidence for them that they should be comfortable in achieving that number. So that way it's good when they actually do meet or exceed their goals. So those are things to watch out for. For Nokia, there are going to be a lot of doubters thinking that they're still the old cell phone company that they were. They have rotated beautifully into the 5G space, and it's one that I think they're going to continue to innovate. I think they said 7 to 10% free cash flow for the second half of 2021, so 1.5 to $2 billion to do with as they please. And I hope that they use that to reinvest in their company and keep pushing forward their innovation in the 5G space and continue to just capitalize on the technology improvements and on their market share. So far, this 50 period that we have on the 5-minute chart was looking like resistance. We've peaked just a little bit over it. We'll see if it's something that we strongly pass. And now, mind you, this is the 5-minute chart. And what we're looking for to really call it truly broken resistance is for the body of the candle to largely be above that area of resistance. Now, mind you, one candle over it doesn't necessarily mean that it's going to stay broken, that's going to act as support. It would be nice to see the actual entire body of the candle be up above it, and also to watch other candles continue to confirm that we have that sort of momentum. So I don't know that we'll hit the $6 mark. I think that this might settle because it is one that is fairly significantly up, even with the guidance. I think that we're seeing a little bit of momentum with this, and I think that over time it's going to take time to fill out and really earn that $6 price tag. All right, let's see who else we got here. Nibble on Semi this morning. Yeah, excellent time to dollar cost average, Sean. Let's see what Nassif says. Hi, join the stream. Good to have you, Nassif. Inflation reaction, momentum, growth stocks. There we go. Let's bring up one of my big friends on this. So Tesla, you can see, for the most part, has shrugged off that news. So if you look here, this candle on the 5-minute chart. This is when that inflation data came out, and you can see it was like 690, and then here it closed at 686. So it caused a little bit of a drop in price, but I don't think that the high inflation number that we saw was something that was really surprising for the tech and the high growth plays. I think that was something that was expected, and I think that the sentiment is turning to one that it's expected, that inflation is expected to be transitory, that these highs are going to happen, these spikes are going to happen, and then they're going to settle over time. And I was saying just when I opened up the stream that we could see the same number come out in August, reporting on July's numbers. It could be slightly higher, and if it is, I expect July to be around the peak of those numbers. So sort of almost like a clunk of getting a train started. I don't know if you've ever watched trains start moving, but you have big, heavy, lots of mass sitting still, and then trying to get enough kinetic energy to move all of that mass is something that takes an enormous effort. Look at this next 5 minutes that we have here. Trying to make a liar out of me. We'll see if this area of support holds right around the 680 mark, or if it's something that we're going to break significantly down through. But so for this month, July, or even into August, really when consumers are getting back out and the demand is really spiking and stuff, and really getting things back into motion, and getting that train rolling is something that's going to take significant effort, and it's going to take some pain, and it's going to take some strain. But once it does move, an object in motion wishes to stay in motion. If I use a physics analogy for this, I think once the market is back in motion and it starts to smooth out, that we're going to start to see some of the inflation start to decrease, and that we're going to start to see a smoother growth overall, where we have that supply finally coming in to catch up with that demand. So workers back to work, goods being produced, and also less pent-up demand, or that energy and that need that people have to get out and socialize. Some of that will have already been met, and then also it'll just sort of smooth out on its own. So we'll watch for that to happen. Let's look at some of the other ones. Tattooed Chef, somebody in my Um, there we go. In the Discord, an article was linked from Yahoo that talked about Tattooed Chef getting more of the products out, I think, into all the Kroger stores across the nation. And so we're back up in the 20s with this one. Yesterday we were down, we broke down below 20 into the 1988. It looks like the lows that's there. Let's zoom out a little bit more. 1976. So not horrible price action today. We'll see if it stays bounded in there. All right. Market is crashing. All right. Let's go here. All right. The indices themselves aren't doing horribly. Not a lot to show right now while it's early like this. The Nasdaq had a sharp spike up right at the open and then drop back down. The Dow about the same thing. S&P not nearly as volatile as the other two. If we stay under 1% of a drop in the markets, it's not going to be so bad for us. Charge point. I'll have to go ahead and see if there's any other news that we have related to this drop off that we had, and that fairly sizable drop off that we had, about 10% or so in the after hours. See what they say on charge point. Volkswagen, so that'd be competition. There you go. Secondary stock offering. So we have share dilution, so that's going to cause some drops in price. There we go. 12 million shares of common stock. All right. Well, at least we have a reason for the drop that we're seeing in this. So share dilution, so devaluing people's shares for the ones that they hold. So when they do this, it's because they're looking to raise capital in order to help grow their company typically. This is a drop that's to be expected. And typically, we have a recovery that comes along with that. So what we'd be looking for in order for how well it recovers or how strongly it recovers, or if it's going to come back up from this price, would be the rest of the EV charging space and EV space, renewable space. When we look in there, we want to look at the other companies to see how they're performing. So for example, if we go to Blink, there we go. Blink actually looks a lot the same as what ChargePoint does. Let me see what we don't have any specific news on Blink right now. Some of this could be in sympathy with what's happening with ChargePoint. So where were we at before? Let me go up to the 30 minutes so there's not so much noise in the candlesticks here. There we are. We'll zoom in. So it looks like yesterday's close, 34th. Okay, so we're down about $1. So about 3% or so from yesterday's close. So not horrible. Let's see what else is dropping here. ChargePoint, AMC down some more. Did they break 40? Yeah, they did. They're down at 39. Not significantly so. So if we go to the daily chart on AMC, there we go. Looks like between $39 and $40 is like an area of support for AMC. And so we'll see if this momentum, if it's something that, how that fight is playing out over time. The fact that we're not back down to like $8 to $10 per share is a really good sign. The fact that it's holding right around $40 per share is a good sign for the apes out there who are still trying to get some action going off AMC. Let's see what else we have. Clover Health is down. There you go. Virgin Galactic. Yesterday in the live stream, I said about the drop, or maybe it was even last week's live stream. I said about some of that hype coming off after the test flight happened. Well, the test flight happened. It went really well, but now it's sort of like, hey, that was cool. That happened. And then you have profit taking, you have selling off. And so then you have this downward pressure. And so it should correct itself over time, that we're just going to see that sort of drop. We'll see where it considers bottom. So where that exchange between momentum and actual value for the company comes in. When you look at the analyst estimates, we're sitting right at the average of the 12-month price target, pretty close to it, 39.20. So I would like to think that a lot of what we're seeing right now for Virgin Galactic, SPCE, is all expected so far. Let's see what else we got. Everything dipping. Go to the moon. Yeah, ChargePoint is one that its most recent to the moon time would have been back in, I believe, January or February, when it went close to $50 per share when it was still SBE. In order for it to have that sort of rally again, I think that we need really strong news about their progress. Really, that about maybe advancing their timeline for turning profitable, or about their huge build out, like a huge order for charging stations. If there's technological innovations that they make, those would all be different catalysts that we'd have that would take ChargePoint and really push their stock price upward in a momentum sort of way, and could possibly take us to the moon. So there's things you want to think about for ChargePoint. SNX. There you go. Thank you, Sarah, for your participation. Let's see what we got. SNX Core. There you go. Tech equipment, logistics, integration services, tech industry. There's the technology solutions segment. Gotcha. So looking at SNX Core, at SNX, it looks like we're close to that area of support right now, 116 down to about 113. So that's actually pretty tight. And it also looks like the 50-day that we have right here is acting as resistance for us, even if we didn't make it back up to it. So we could expect this thing to go between 114 and 122, really depending on what happens for the company. The nice thing is, when we look at this, we have 8 analysts covering it, and we're currently sitting near the low analyst estimate of this of 120. So it might be a little bit rich if this is a 12-month outlook, but there's been a lot of stocks in the market right now that are running a little bit rich. And so this, especially in tech, so this is just another tech one that's putting us near that low analyst estimate ahead of time. I would like to see, if I were going to invest it, I'd like to see it farther down this way, where it's away from those 12 months, and then it has room to grow. So I'd be looking for a bigger deal, I guess. There we go. Workhorse. There we go. This is one that, wow, check out that support that it's finding right along the 50 period. It broke it there, but it's within the body of the candle. If that entire body of the candle was down below it, then we could find it more as stronger resistance. Instead, it's acting as support for us right around the $12 mark. Now, mind you, it is a smaller company. Really, they need contracts and they need production to really support any sort of price that we see. We can see the worst of what happened. It almost has this sort of rotational symmetry, where we have this dip this way and then they rise up the other way. So somewhere around the middle, I'm not surprised to see it going for about $12 a share right now. All right, Arcimoto. Also want to keep track of what's going on here. Good morning, Angelito. All right, I'll do Arcimoto quick, and then we'll get back to NEO. Check out Arcimoto using the 200-day as the line of support for it going forward right now, which is at its current price, $13.55 is the most recent 200-day moving average that we have for that, and we're trading 60 cents above it, so about 4% above where that is. So we're trading up above support, and then we have room above that. So positive slope, bullish. The fact that we have the 50 period curving up towards the 200 days, so this faster moving average curving up towards the slower moving average. Arcimoto is one that I can definitely see it having a future with its small, efficient, and cost-effective vehicles that it makes and those day trips. And I was looking at a headline just this morning. Let me see. It was this one right here from Benzinga. I didn't read it yet, but it says this fun utility vehicle, so FUV, makes you wish you had one or two or a fleet. So I just picture, me and my buddies renting a whole bunch of these, like when we're at the beach or something like that, and just using them to cruise around. If it really is fun as the name advertises, that could be something that that might actually get more people to buy into it as a recreational sort, or just as a vacation sort. If it is like a fleet type vehicle where there's a big rental shop that you can go and you can get these and travel around, and also fairly green vehicles too. So those are all things to go along with Arcimoto. Analyst estimates on this one were above the average. So in my opinion, just by looking at the analyst estimates that are on here for their price targets, it is trading a little bit rich. However, with its current price, I mean, at least as far as a swing play goes, I wouldn't say if I were going to do it as a swing trade around this time, I wouldn't call it horrible. We are down near the bottom of this range that it's recently been trading at. For me to really jump in, I would like to see it dip just a little harder in order for me to get into that. If I saw that $7 again, that would be a time that I would really take a nice chunk out of that, nice chunk of shares, and then give it time to have that sort of recovery that we see. All right, let's go to our friend Neo. Bank of America bleeding. We'll check it out. I'm sorry, not Boeing, not Bank of America, BAC's Bank of America. I always want to, oh boy. Anyway, enough of my confusion. So, yeah, check out Neo. Good, not bad. Kind of returns us to where we were at back over here. If this trades sideways for a little while, being a long-term investor, I would like to see this just hold steady for a little while, right around the mid 40s or so. And if we had a significant amount of FUD that caused it to pull back pretty hard and to drop pretty hard, I would dollar cost average into it a little bit more than what we have. This run up that we saw to 55 was a bit quick. It was a bit fast. And that depends on what your outlook for Neo is over the next 12 months. I see it easily going to $60 a share. I think that 60 to 70 range is actually really comfortable over the next 12 months. And when you look at what we see for the analyst estimates, 22 analysts on this. So when you see a bunch of analysts covering it, you know that there's excitement around it, whether it's bullish or bearish. So this is one of the more anticipated plays that are out there. Pardon me. Perfect. All right, so 50% buy. So over 75%, over 3/4 of these analysts believe that that it's a buy for at least a buy or a strong buy for Neo. And then a few people hold, and then it looks like we have very few that say that it's going to underperform. And if we go to tip ranks on this one, there we go. I think that the average is around 68 on tip ranks. 64. I was a little bit rich with it. All right, so about a 40% upside, just shy of 40% upside from its current price. So for this one, I think my cost basis, without looking, I think is around mid 40s. So I have about a 40% upside just in the first year from today. And 2022 is actually expected to be a really good year for Neo as well. So by the end of 2022, we'll see how that really plays out. And I really want to see how the adjustments go on. When you look, Bank of America just put out yesterday a price target of 60, HSBC 69, Citigroup 72. There's a 65, 64, 57 up to last month. And then after that, it starts to get a little bit older. You can see 3 months ago, 4 months ago. When you look at Tesla, by the way, Tesla is always a fun one to look at for analyst estimates. All right, so looking at the analyst estimates that we have here. So 23 ratings, 10 say buy, 6 say hold, 7 say sell. So there's actually more holds and sells for Tesla when you look at this than there are buys. And if you don't know the history of price targets for Tesla, Tesla's one that has consistently just outperformed and has done a lot of short squeezing of different bears who have been out there, and has just had considerable success when you look at their stock price that's here. Goldman Sachs came out, it says date now. $860 is the one they put out, $900 from Morgan Stanley. Look at JP Morgan. Let me zoom in for you. $160 per share for a almost 75% downside right from where it's at. And that was something that they reiterated 7 days ago. I don't think that we're going to see that. I would like to actually read, if that's open, read their analysis and find out why they believe that it's a $160 stock. If they're just looking at the astronomical PE that Tesla has, or are they basing it on the current numbers that are out there, or are they using like a trailing 12 months? Are they looking at the roadblocks? Now, mind you, bear cases are healthy and bull cases are healthy. And getting a full view of what's out there. And I think I've gotten some people who have been angry about the way that I talk about some stocks because they're emotionally tied to the stock, whether it's because they're a very big fan of that company, or because they're an investor in that company, or because they're holding on to something that they want to trade, or that they currently have some sort of financial attachment to, whether it's a swing trade, day trade, whatever. For me, I guess it might be easy if I talk about it in terms of like professional sports. I love sports, and I played a lot of sports, baseball, football, swimming, diving, cross country, which actually I'm wearing. I don't know. Let me go to my stream so I can actually see. There we go. This shirt that I'm wearing today. There you go. Is my cross country shirt from my senior year in high school, and it's almost 21 years old. In September, my shirt will be 21 years old, and still fits. So I don't know if that's a credit, kind of a skinny guy, and I stayed a skinny guy. So maybe I'm a lifelong teenage boy or something. I don't know. In any case, when it comes to professional sports, people like to ask me what team is my favorite team. And honestly, I don't really have one. I just like sports. I like to watch the different games and matches and meets that take place. And, I'm very fair-minded when I watch them take place, that I don't really end up cheering for one side or the other side. And my friend Sean, I don't know if he's still in this stream or not, but he does pop in here every once in a while. I played volleyball with him. And, whether we're on the same team, different teams, I don't really care if I've won that game or if I've lost that game. I just like to play. All right. Same with the stock market. So bring it back around to what we have here. When we look at these stocks, I just, even though there's companies that I love, I keep that sort of emotion away from the investment that I'm making, that I don't really have any pride over the company that's going to get in the way. It either makes sense for me to be in that investment or that trade, or it doesn't make sense for me to be in that investment or trade. And it's no hard feelings anyway about the company that might happen to be out there. So I either like the financial position that I put myself in, and so I'll stay in it, or I don't like the financial position that I'm in, and I'll get out of it. And it's not over the love of the company for the reasons that I invest. So some people get angry because of the way that I talk about stocks. I'd rather the bullish case and the bearish cases both be seen, and to get a full perspective over what's taking place. And there's been plenty of times that I've kept myself out of really bad situations because I just didn't have the certainty that the bullish case was really something that was clear as I wanted it to be, or that the bearish cases that were out there, that they had enough merit that, maybe the stock isn't really going to pull through the way that I would like it to. Of course, there's been other times I have been caught blindsided that I just, especially my earlier trading days, where it just didn't go the way that I wanted it to go. All right, let's go intraday on NEO here. All right. So checking out what we have for NEO. In these opening hours that we had, green candle off the bottom, right just below $46 per share, and then popping into this next one. We don't really have a clear direction, at least on the 30-minute. Looking at the level 2 that we have up here, there's a lot of contention right around its trading price. Lots of buying and selling pressure, almost equally so. And then when you look at level 2 here, it looks like we have lots of resistance, even up through 45.94. Lots of orders there, 45.81. So the orders are actually fairly tight on this one right now, and we'll see how that plays out. It looks like this could hold, at least for the time being right now, in the high 45s, and we'll just see if there's enough selling pressure which is currently mounting versus the buying pressure. We'll see if that's enough to melt away what we have. Looking at the candles that are here, if this ends up closing high and we get a bit of yes, like that, this could be something that we start to see it turn back around again on us. And it looks like for these opening close, there we go. I'm just trying to consider this over multiple time frames here. 46.71. All right. So at least in the short term for market open that we have for NEO, it looks like we're staying somewhere near that $46 mark, near the low 46s, high 45s. And honestly, that's exactly right where I'd like to be. Let's look and see what else we have in here. Roblox, where'd it go? And I missed. I'll just type in the ticker. Well, we got Ethereum Grayscale Trust. We'll take a look at that. So let's go to the daily chart. There we are. So this will move a lot with the price action that we have for Ethereum. And Ethereum's having a rough day today, being under 2,000. And so Ethereum Grayscale Trust also having a rough day, being under $20 per share. As Ethereum strength comes back, so will Ethereum Grayscale Trust. So if you don't have that position in crypto, but you would like exposure to Ethereum, Grayscale Ethereum Trust is one of those places where you could find that. And so the sell-off that you see will coincide day by day with what you see going on in the crypto market. So this is going to have a lot of volatility to it, just like crypto will. All right, back to Roblox here. Not bad. All right, so we actually have enough time in on Roblox. Let me see what their IPO date was, March the 10th. And we actually have a 50-period moving average on this on the daily chart. And so far, look at how well it's acting as resistance for us. I'm sorry, support for us, moving along these candles here. That's incredible to watch that take place. I think I spoke about this before. I watched it go up over $100 per share. I'm like, well, that's not going to hold. And I almost sold my position. Really, it's those realized gains taxes that you would pay. Something that kind of made me decide, maybe I'll just hold on to it and just continue dollar cost average over time. And the thing that keeps me from, honestly, being at support right now, it's not a horrible time, especially after this drop that we see today, that it's down between 3 and 4%. So if I was going to dollar cost average, which looking at this, I might take a little bit more of a position, just nibble a few more shares. In my mind, I struggle with getting over the bias that I want to pay $60 for this. And that's kind of absurd, because when you look at their chart for all time, their lowest price was $60.50. And so, it's funny to have that bias, because there's almost no factual basis for me wanting it for 60. I just want it for 60 because I think it would be an absolutely incredible deal. And I'm not wrong, because that's lower than it's ever traded. So talking about $60, like I said, I think it'd be absolutely incredible. Analyst estimates on this starting to come in. We are below the analyst estimate. So when you hear me saying that I want it for $60 a share, of course I do, because then I got a 50% upside over the next 12 months, according to the average analyst estimate that you see here. The boasting is that they are already profitable. Some of the FUD that would go with it is that being in the game space, that it's hard to predict what exactly is going to be viral and what's going to get a lot of attention, or does it have staying power? Does it have more ideas for innovation coming up? And Roblox has a platform. The fact that so many different games and levels and stuff could be developed. I can tell you, I first got introduced to it through, I had a student years ago that mentioned Roblox. Have you ever played Roblox? And I'm like, I don't know what it is. And then a few weeks later after that, my daughters were watching obbies. They kept saying obbies on Roblox. I'm like, what's an obby? Apparently it's an obstacle course, but for a video game environment, in this case for Roblox. And I watched it, and it seemed pretty neat. And they actually, when they were littler, they'd be like, Dad, can you help me get through this obstacle course? And I'd be like, sure. So I would do the difficult part if it was just, something they're getting too frustrated with, and ask for me to help them. But it's grown beautifully since then. In some of the games that they would talk about playing recently, and talking about using the Robux for, which the developers who receive Robux and can turn it into real cash. So the developers for the games on the platform can make considerable money if they make these popular games on there, sort of like what you would have with Skills. And that's why it's kind of seen as a competitor with Skills. Skills not yet being profitable. Roblox getting a lot of attention because it is already profitable and is a behemoth. But the Adopt Me, I think, was what they were talking about. And I thought it was some other game that was just downloaded from the App Store. And it turns out that it was actually, again, Roblox. And they're talking about all these Robux that they were spending. So in-game currencies. And for Christmas time, my younger daughter asked for Robux to play Adopt Me because she wanted these different things. And my older daughter also played that same game with her. And also she would use Robux. And so whoever the developer was for Adopt Me, I'm sure is making bank off of it, because I think that's one on the platform that has just been incredible. And there's so much variety to it, and there's so much room for improvement and innovation. I think that's why you see a lot of this bullish behavior that you do on Roblox. All right, intraday look at Roblox. All right, well, charge point, Lee. All right. I got to keep up with people here. I'm starting to talk too much, and it's past the 10 o'clock hour. Guys, I'll go until like 10:15 today. I was supposed to stop at 10, but I don't feel like we covered enough ground. I would like to do that for you. So, like I said, I aim to stop at 10 a.m., but I've already gone as late as like 10:45. And one day even made it to almost 11. Intraday on Roblox looks like it's finding support right around $84 per share. So we'll see if we get signs of a reversal playing out on that over time. All right, GDDF. Good food. Oh, I think I typed in too many Fs. No, I didn't. Ooh, this is a tiny one. All right, so Angelito, is this the correct one that we're looking at here? Let me actually go to the daily chart, because it looks like there's not enough trade volume to really... it's a significant gap up. So I'm guessing, based on these low trade volumes, first of all, when you look at ones that are only trading hundreds or even a few thousand in a day, liquidity is going to be the issue. That you could get in and let's say that you were in at one of these bottom prices at like $5 or $6, and like, sweet, it went up to 8, and you go to sell your position. Depending on the size of your position, you might have trouble finding buyers for what you're selling. So those are things to watch out for getting into these smaller plays and these low volume plays. And if it's also low volume and low market cap, those can be highly subject to market manipulation. So I would just be very careful with what you do here. 6 days ago, fiscal quarter 3 results. Not seeing any news on it. Yeah, off of this gap up, I'm not exactly sure what would explain it. But for me, if I were to get into a small play like this, depending on where I was in, if I was in down towards these support prices of around $6 per share, and looking at the price action that it's had, and that if there's no specific news, I might try and take advantage of that elevated price, do some profit taking, or at least minimize sell enough to manage my risk completely. And then if I was a company that I was bullish on, that I think is just at the very beginning or at the inception of their price action, then it would be one, if it's a long-term play and you think it's fundamentally strong, then, you might diamond hand it in the meantime. See what else we got here. Thank you, Lauren. I really appreciate that. And thank you, Taco. Okay, quarantine, I gave my thoughts on NEO for the day. I think, at least for right now, could stay around mid 46s unless we get some sort of big push one way or the other. All right, let me see what else we got here. Charge point moving, Lee Motors. All right, we haven't stopped by Lee today, so let's check out Lee. Ooh. Well, in the daily chart anyway, he's actually shaping up fairly nicely. We've seen that dip. When was that? On the 8th of July. We've seen that across a bunch of different stocks. That was sort of a low day. We've also seen this sell-off happen, and they've come out of that pretty well. This could fill out to look a little bit more like a pennant formation over time. I enjoyed seeing this resting period here Because when you don't get that resting period, when you have a continued upward pressure and upward movement in your stocks, and then there's no real correcting time, when it eventually does correct, it corrects really hard. And then you get people stop losses going off, and you get people bag holding. And we don't want to see that sort of drop. We want to see these smaller movements and smaller corrections over time. And I don't know that we may not have seen the end of the correction yet, so we'll have to watch and see as it plays out. I do want to take a look. 37 down to 36. Okay, so $36, $37 looks like where we're hitting resistance off of this previous peak that we have here, and then it found support just under $30, right around $30 or so, so $29 to $30 per share. And so we're currently sitting in between that. So my thought on Lee Motors for right now, I'm bullish on Lee the same way that I'm bullish on NIO. I'm more heavily invested in NIO because I think it's the bigger company, and I think it's more influential in being a leader in its space in the Chinese EVs. Those are the reasons why I'm more heavily invested in NIO. But Lee, being a smaller play, is one that I also have some exposure to as well. Short term, we could pull back to 30. It'd be about a 10% drop from where it's at. And then we had room up to about 36. So we have just slightly more upside to resistance than what we do to downside. We have our 200 period moving average finally showing up, and our 50 period also showing up, just about to cross each other. So this could, depending on what the rest of the market does over the next few days, we could see this break to the upside as we get these different bullish and bearish forces squeezing down on this price that, eventually it'll pinch hard enough that, it'll give one way or the other, possibly sometime soon. Analyst estimates on Lee. Well, we're above the low, which is all the way down at 23. We have 19 analysts, not almost as many as what we had on NIO. And let me see, about 20%-ish down from the average, not bad. And then a really big bull case. Let's look at tip ranks. I want to see the dates that are associated with these price targets. Rocket Mortgage is crashing. Yeah, Rocket's having a rough time with it recently. Need to go back through and update on what we see. All right, so Lee Auto, average analyst assessment on here, low is 37, and we're currently trading right there with what they have posted. We saw this on the chart as well, around $32 per share. So from that, you can go up $5. So what's that? About 16% to the low analyst estimate that we have here on tip ranks. And up that $45.90, almost $46 is 42% upside. So almost same percent upside with what we saw for NIO as well. And then that high of 62. So Credit Suisse, $41, Goldman Sachs, $62. And that was as recent as last month. Citigroup, $44. Let's see, I'm looking for one. All right, so check out the dates that we have. 8 days, last month, and they're all upsides from what we had. And if we go deeper into the chip shortage type area, we have all upsides there up to 6 months ago. We had to go all the way back to 9 months ago, where coverage was initiated by some of these people. $25, $20, $10, $20, and we've exceeded all of those. And so 9 months ago, 3 months from now would be currently July, so October. So this is all these prices that you see that are downsides that are currently being reported on here. These would all be leading up to the election. This is all prior to or during that FUD time we had between will it be Trump or will it be Biden. And since that time, if we had something in this gap, that would be more like 7 or 8 months ago rather than 9 months ago. We would see considerable price differences. So after that happened, and after we saw the proliferation of the EV stocks through there, we start to get these richer and stronger price targets that we have. So I would count those as, at least according to the analysts that we have on here, and we have some big names: Jefferies, Deutsche Bank, Bank of America, Morgan Stanley, Citigroup, Goldman Sachs, Needham Credit Suisse. New Street calls it a buy, reiterated from last month. But with no price target. Lee's actually looking pretty attractive, according to what we see with the experts here. Let me switch this around, or I'm going to keep getting it wrong because I like to have WEBULL swipe one way and then Chrome swiping the other way. So yeah, for Lee, this might just break to the upside, and we'll have to see. Like I said, I'm okay if EV and tech and high growth, if they just trade sideways for a while and just give us a nice base of support, I think that would be absolutely incredible for confidence and how to trade moving forward. All right, Rocket. There we go. All right, so Rocket Mortgages. For this one, my position is somewhere around low 20s. And when we saw this spike happen back here, I actually covered my risk. So right now, the rest of the shares that I'm sitting on, I believe, are complete profit shares. And even though that's shrunken up over time, there's no more risk involved, at least not as far as losing money goes. And as far as tax purposes goes, I haven't made any money. I don't have a realized gain in Rocket companies right now, but I do have that sort of position. So I'm not a tax expert, so I don't believe, it's my belief that I don't pay taxes on that one. But that's something to check with your CPA. Not to check with me, but yeah, wow. We've had a big sell-off recently. And where were we at back on May the 13th? $16.22. So we're coming down. Let's zoom way out to see more of the shape, more so than the detail. We're actually sitting sort of in an area of support right now. And that the competition that we have with Rocket Mortgages is something that's really causing this downward pressure here, their ability to really do well in this sort of mortgage environment and financial environment. So we could hold at this support. We could see it possibly get pushed down a little bit lower to come back and tag this bottom. But again, if it's one that you're looking at it from a fundamental perspective and you think that it's going to recover in strength over time, then now would be starting to get to be a pretty good time before we get down to this one. You have another 10% down or so from where it's at to its probably it is the biggest low that it's ever had since it's become a publicly traded company. And then after it breaks that, if it does break that floor that we have at around like mid 16s to low 16s, then we're in uncharted territory. It's just a big empty gap where there's really no support to be found. Whereas right now we are sitting sort of at a sort of support level right now, and then the next one coming down according to what we see from the candles here, where the bulls come back in. So this could take a little bit of a bounce from where it's currently at. Let's check the news on it. Tone Day brewing price war. There we go. So this price war for mortgages is something like, honestly, DeFi, what we have in the cryptocurrency space, I think is really going to have a big part to play as the crypto space matures and as decentralized finance matures over time. And it's really going to challenge the traditional lending system that we have, and even as far as what we have for home mortgages in that sort of lending environment, the fact that it does cost so darn much in order to do that, and it takes so much time. So like open door technology, streamlining the process and cutting the time down on it. If DeFi comes in and also makes it even cheaper in order to buy a home, then that starts to wash out some of the profits that we'd see in traditional mortgage companies like we would have for Rocket Mortgage. That said, I have refinanced through Rocket Mortgage already. And at the time, it was a very much simpler process and very cleanly handled at the time. And it's why I got a position in it initially. So we'll see as this plays out. But it is sort of continuing this trend that we saw before. And now it's a matter of will a reversal come in? And if so, when does that reversal come in? All right, let's check in on Fubo here. I'm going to start wrapping things up. So if there's anything else you want me to take a look at quickly, just go ahead and let me know. Otherwise, I'll wrap up here soon because, like I said, I was going to stop at 10, but then I talked too much, so I went on 10:15. So Fubo is one that got mentioned when I started my channel. There were a lot of people asking, what do you think about Fubo? What do you think about Fubo? And I didn't really have any thoughts on it at the time because I didn't get enough of a chance to read up on it. So they would start asking me in the beginning of January, and then the momentum took it and it shot up from where were we at? It doubled in price basically from beginning of January until the end of January, and then it sold off a little bit sooner than around the same time, I guess. Sort of traded sideways for a little while and then sold off with the rest of tech and high growth. And it has a very similar look to what we saw for the rest of the recovery for tech and high growth since that time. So when we see the way that the market's going to go, and again, we see more of that golden cross possibly coming up in this narrowing that we have between the 50-day and the 200-day, Fubo is a legitimate company, and it's one that it could be very successful moving forward. Decently below, we have a $10, a 33-ish% upside to the average analyst estimate here. Making up to the high, we still would 2x that high analyst estimate. There we go. All right, so on tip ranks, we got 35% upside on Fubo. 6 buys, 1 hold. There we go. Needham 60, Oppenheimer 32, 42, 25, 53. Yeah, so these are a little bit more all over the place than what we saw with Lee. We have the top 4 of these are 5-star analysts, almost 5 stars, 5 stars. And you can see with tip ranks, you can see their success rate. So this guy, 292 out of 413, is 71% success rate, 73% for over 200. So these aren't just people with low success rates. This Shweta Kajuria, I'm sure she would say that I butchered her name. Fewer ratings, but currently rocking a 93% success rate. So she says $30 per share. So yeah, a little bit of upside to go for this one. So 32% over the next 12 months, and that high as $60 is something that came out just 12 days ago. Definitely one that I want to do some more reading on in the future. Apes running out of bananas. All right. I'll close with this one. I want to check in on this one. So Digital Turbine, during one of my more recent live streams after making it back from my honeymoon, I talked about coming down and touching support. I want to say it may have even been on the 8th of July that we see here, and that we could move back up to that resistance. I kind of want to go back and watch that now and see if that's actually what I said. And you guys are welcome to do that too, if you're really that interested on it. But I said buying down here, if that support holds, could be a good time. And the analyst estimates on this are actually a good amount up from what we see right now. So we'll see if we end up breaking that resistance or if that resistance is going to hold for that 50-day. We are trading above the 200-day, so that's bullish. RSI, we had some building momentum, and then it kind of got cut short with everything else. Didn't break that low. If it breaks this low and goes oversold, we could really be in good shape for some buying territory moving forward. But I think this most recent sell-off that we see goes with the rest of the correcting that we have in tech and high growth. That this is not immune to that, but it moves in sympathy with it. Analyst estimates. We have 5 analysts covering this. Let's go to tip ranks. There we go. So this is one that I originally mentioned on my channel as a possible range trade, being that it was down near support, and then that I had a lot of upside to go until we found resistance. And we did recently find support. However, now we're kind of bumping up against resistance again. So this one, I think, would be a better long-term fundamental play than it would be at its current price as a swing trade or as a range trade. Well, not range trade anyway, because we have yet to see it break resistance over that 50-period moving average. But if it does, we could be in good shape. I would sooner wait for it to come back down to the 200-day before really treating it better as like a swing play or a shorter-term range trade. So let me see. So 105 7 days ago, 115 7 days ago, 132, 100, 86, 85. I'm sorry, there was a fly that just. Oh my goodness. Oh, that was awful. I'm gonna have to watch the replay on that one. Oh, a fly just went directly up my nose. Oh, it's killing me. My daughters are gonna watch that and they're gonna laugh and they're not gonna let me live it down. Oh, all right. And in any case, we are trading right now at $65 per share. And then we have like 33% upside just to get to this low analyst estimate that we have, 63% upside. So honestly, if I were to make a video, and maybe I will make that video about top stocks to buy now, I think apps would be on that list. Just because it is, according to the analyst estimates that we see out there, it is one of the cheaper stocks to find on the stock market right now. There are so many that they do have room to run, but not as much room as I would like to see. I would like to see that the price of something got pushed way down in order for me to buy really heavy into it. This would be one that I think is for a long term, a good time to do a dollar cost average. And then for a range trade or a swing play, I mean, we are kind of near support, but we're a little bit too close to resistance, where I think that if that does keep on resisting, and if we end up getting this 50-period crossing over and it sells off, it's just a little bit too much of a risk for a short term for me. But I think long term, I think that we're going to see more of this bullish momentum that you see as I zoom out. I think that you're going to see more of that play out over time. All right, guys, I'm going to wrap this up. Thank you very much for stopping by. I always enjoy these live streams. Remember that tomorrow starts my family vacation. I will be back next week. I'll be streaming on Thursday. So let me see, 14, 15. Thursday is July the 22nd. So on July the 22nd, I'll be back to my live streams. In the meantime, I hope to do some other videos, some recorded videos to put up on YouTube to watch. Just checking out some of the stocks. I'm an early riser, so I'll likely be up before the rest of my family. So drink my coffee, do some stock research, hopefully put up a video or two. I might be filming on my cell phone in order for that if I don't take my recording equipment with me. But you know, the information will still be the same, even if the video format isn't necessarily as clean. So thank you guys for stopping by, and thank you for all your participation in the comments. I really appreciate it. Have a great day.